Good evening and welcome to another episode of my weekly market commentaries. And in this episode, we'll be talking about the post-US presidential election. By now, all of you will have already realized who the winner is. And of course, the market has reacted quite violently. We can see across all different assets. We have saw the dollar rebounded. We have saw US equity market, including the Nasdaq Composite, reclaiming all-time highs. And we also see gold retreated very massively. And of course, Bitcoin, as we are speaking, is currently challenging the 80,000 handle. So all these are market reaction. And today we will do a bit of a recap as to see what else is going to be happening in the next few days. Now, before we go any further, I would like to acknowledge the sponsor, IronFX, which has been around since 2010 with operation in 180 countries around the world, and they are a major sponsor for my events, both on and offline, and I'd like to acknowledge that. And before I go any further, I just want to do a sound check and see if you guys are able to see what I'm showing you. If you can you just put into the comment? If you're not able to access the chat, just put them into the Q&A. Just let me know that you can see and hear me. Thank you very much, Warren. Now, again, I would also like to make this announcement whereby this presentation is by no means an offer to buy or sell any kind of securities, and the trading of any kind of margin product, whether it is FX or CFDs or even cryptos. Those do carry risk. To understand your own risk profile before you attempt to trade any kind of risk product or any kind of margin product. And of course, I'll be sharing you my views, and these are strictly my views, has got nothing to do with the sponsor IronFX, and we will not be responsible for any action that you may take as a result of attending this presentation. Now, first off the bat, we all know, like I said, who have already won the very much anticipated so-called very tight race. It ended up not very tight a race. We can see the Trump's in terms of his margin over his opponent, Kamala Harris, is 312 seats, votes to 226. This is the electoral college, and it is a very comfortable lead. You can see that in US election term, this is possibly what we can call a landslide. So this is a result that I think the Democrats are not prepared. I think they are very much stunned by the rollover by the Democratic Party. Not only is Trump able to secure the White House come January 20th, 2025, we can see that the Grand Old Party, which is the Republican Party, has won back control over the Senate. Now remember, in its current iteration, the Congress is divided into two chambers, of which the Democrats has been in control of the Senate by one extra seat, which is like we call the bare minimum. Okay, so we can see that in this election, not only is the presidency up for grabs, the entire Congress are also up for election, and we have seen the result. The GOP has won by 53 against the Democrat 46. So they have basically won back control of the Senate. The last time they did that was during Trump's time. So we can see that the other chamber of Congress, which is the House of Representatives, the results are still coming in. It's not fully out yet, but you can see that the current tally is the Republicans have won 213 seats, of which they only need a minimum of 218. So we can see there are only 5 more seats to be counted. And if they can secure another 5 more seats, they would have a clean sweep of Congress. It is what we call a trifecta, okay, in which the presidencies and the legislative arm of the government, which is the US Congress, will be under one party. Now, this is very important because we have seen if the Congress is divided between two parties, policies of the presidents will find it very difficult to be passed. And if the Republican can also secure the House of Representatives, which is currently under their control, okay, so we will know very, very soon over the next few hours or days what will be the final tally. And if they manage to also win the House of Representatives, it will be a clean sweep, and it would enable the sitting president to actually pass through policies a lot easier. Okay, so this is something that is going to be monumental because Trump has already stated during his campaign some of his favorite policy, including closing the southern border and, of course, mass deporting all those illegal immigrants, and that those will be in the millions. Okay, and this will have impact in the workforce, because we have seen that if you take away the migrant, okay, every country will have a little bit of illegal migrant. Because of their status, they will be exploited for cheap labor. And if Trump managed to expel all these illegal immigrants, it will definitely show up in the wages of American workers, and this will impact the bottom line of U.S. companies. Of course, one of the other major pillar of Trump's policy is to cut taxes, and this should be seen in light of a business-friendly kind of policy. However, we also understand that the U.S. debt is pretty high, and the deficit in terms of budget deficit has not been able to be closed in terms of their collection in taxes and how much they need to spend on their various programs, and that deficit has been widening again. And if Trump's taxation policy result in lower receipt in terms of tax collection, that would mean that the debt deficit, the budget deficit, will actually widen. Now, the other thing that Trump is also very, very vocal about is, of course, imposing universal tariff on all imports into the United States, irregardless of whether they are from allies or whether they are from perceived from countries that are in direct competition with the United States, such as China. So these will again end up as higher inflation, because tariff, at the end of the day, we have seen since the first time Donald Trump actually used tariff as a policy, we can see that inflation was actually elevated. And if this universal imposition of tariff on all imports, it will definitely show up as higher prices, because at the end of the day, it will be the importing companies in the state that will be paying for this tariff. So again, we can see that that will also have repercussion across all the other trading partners of the United States. We have already seen within hours of Trump declaring victory, we can see that the German government actually collapsed. Okay, so this is how monumental this election is. Okay, of course, the other thing that we will also be looking at, other than lower taxes and higher tariff, is how Donald Trump is going to handle the two wars that is currently raging, one in Ukraine and the other one is in the Middle East. Trump has many times stated that he can actually end the war in Ukraine within 24 hours of his presidency. So we shall see what he can do. Okay, I don't think it will be that easy. However, his relationship with the Israeli Prime Minister is a little bit complicated, and there will be no easy answer for the Middle East. I think that is going to be because Trump is seen to be very pro-Israeli, Israel. So definitely his policy towards Israel and the Middle East is going to be very, very complicated. So now this is the result. And of course, now that he has won the election, okay, we all knew how the current Biden administration has been making life very difficult for Donald Trump to even contest this election. So much so that they have actually piled on a lot of what you call that frivolous charges against him. And of course, he survived 2 assassination attempts. One that was close shave. Okay, the other one was knee in the butt before it could actually become before the shooter can come anywhere near Trump during his golfing. Okay, and we can see that of the charges that has been laid against Trump, okay, the one about that Stormy Daniels, that one stick. Okay, and the judge in this particular case has yet to judge. Okay, so basically, if Trump, okay, is being sentenced, which the next date coming up we want to watch will be November 26th. November 26th is a major date because the judge will have to make a decision as to whether he wants to go ahead and sentence Trump. Okay, he has already been found guilty, and whether or not he being the president-elect will have any kind of privilege whereby he can actually forgive himself. But because there are so many other cases that has been levied against him, some of them are actually at the state level, which means that Donald Trump would not have the presidential power to pardon himself. So we can see that we will have to see if for some reason, okay, the judge decided that he wants to send Donald Trump to jail, he may not necessarily end up in jail, but I think there will be some legal maneuver by his defense team to actually keep him out of jail. But that will be something to watch, because if he is being convicted, he's already been convicted but haven't been sentenced. And if he's sentenced to jail, that will be something we want to watch. The market may not take it very kindly. Okay, so do watch out. November 26th is not that far away. We are practically 50 days towards the end of the year, but the date to watch will be January 20th, 2025. That will mean it's 70 days away. Now, 70 days from now until his inauguration, there is still a major risk in terms of security as far as Donald Trump is concerned, because we have seen that he has actually requested for correct military escort during when he flies. Okay, so there is still that risk of physical harm to him from now until then. So what I would think is that for the next 70 days until January 20th, when he is fully inaugurated, there is still the possibility of something really, really bad happening to him. Okay, and this is something that we do not want to dismiss, because we have seen the power behind the current government is basically trying all means to make sure that he doesn't get into White House again. Okay, because if Donald Trump actually managed to end the war in Ukraine, all the hundreds of billions of dollars of investment in Ukraine will go up in smoke. Okay, so basically, that means a lot of people's interests will be under threat. Okay, and I think these people who has already invested in the war wants to see one ultimate outcome, which is a victory against Russia. Okay, based on what we have seen from reports from the battlefield in Russia and Ukraine, we can see that Ukraine is definitely having a hard time, and we want to see whether Donald Trump's team can actually propose a peace plan that is acceptable to both the Ukrainian and the Russian, in particularly the Russian. I think there is one peace plan that is currently being floated. Okay, I think this is a trial balloon. I think I think the US will be proposing a buffer zone, okay, and allowing Russia to actually keep all the lands that they have currently occupied, and basically putting a restriction on Ukraine seeking NATO membership for 20 years. But I think what Russia will want is that not even 20 years. I don't think they even want to allow that to become a reality. So basically, Ukrainian NATO's application is a no-no, okay? And if they cannot resolve this, what happens if the Russians say no, okay? So if the Russians say no, nobody knows what would be plan B. There's no plan B at this moment in time. So if the current proposal, or what we hear to be rumors of the proposal, is such that there will be a buffer zone that will be monitored and occupied by NATO forces, I think that is something I think Russia may not be too happy about as well. Okay, so not sure how this thing is going to be playing out. We will know in 70 days time. 7 days is a long time in politics. So hopefully nothing bad happened to the man here, and we shall see as how the market unfolds. Okay. So for the week itself, we still have our regular economic data. First off the bat, we have Chinese PMI in terms of services. This one is by Caixin. Okay, if we have seen the report has been actually very robust. Market was expecting only marginal better result. The previous month, for the month of September, was 50.3, which is a borderline case between expansion and contraction. Market expecting only 50.5, so it's a marginal improvement, but the actual result come out was 52, which is a lot better. Now at 52, we can see that this is the best they have done in 4 months time. Okay, so hopefully this will end up in the next few months leading to the end of 2024 to be a much elevated performance in terms of their PMI. Okay, so services PMI is good because it will shows that at least at the services sector here, things are looking up. Okay, here we want to see the reaction from the other central banks. The Reserve Bank of Australia actually held interest rate unchanged at 4.75%, and this has been in place since November of last year. So Australia Reserve Bank is definitely fighting a different battle altogether. Inflation remains elevated while the economy is actually tanking. So if they lower the interest rate, it will actually helps to boost the economy. But however, they are also afraid of lower interest rate boosting inflation as well. So right, they are caught between a cliff and a hard place. So but it's common knowledge that the Reserve Bank of Australia would at some point have to cut interest rate because the rest of the major central banks like United States has already cut interest rates. Okay, so this is the services PMI for the United States. This is the ISM. Again, we can say that the performance has been very, very good. And for some reason, the data coming in from US has been very robust. If you take the services PMI here as an indication, we can see the PMI came out here with 56 compared to market expectation of a dip to 53.8. It came in a lot better. In fact, it is the best we have seen for the last 24 months. Okay, so this is something to celebrate, and that is also one of the reasons why US equity market has been very, very buoyant following the Trump's victory. Okay, here we have New Zealand labor report. We can see the New Zealand is definitely suffering. We can see their employment change has actually gone down, and we can see that the unemployment rate has been elevated. In fact, when you look at the unemployment rate, it's a bit scary because it has been going up every quarter since the beginning of last year. So New Zealand is definitely in a lot of hurt right now. Australia is too much better. So I think the Australasia economy between New Zealand and Australia definitely now is on the rope. So we want to see how this thing pans out. But I think at the end of the day, we have seen the Reserve Bank of New Zealand actually taking things on their into their own hand by starting to cut rates rather aggressively. Okay. Now, earlier on, I did mention hours after news that Trump has won the election, the German government, which is a coalition made out of three unlikely parties, has finally broke. What happened is that the opposition party is not, I won't say opposition party, one of the coalition partner is running is actually the finance minister. And since day one, it has been an uneasy partnership. And finally, I think they decided that they want to go separate ways. And so much so that the chancellor of the chancellor himself has actually sacked the economic minister, and this will lead to a so-called election. Okay, there will be a vote of no confidence, which is going to be slate for January, which is 2 months from now, which the current chancellor is very likely to lose. And if that's the case, then a general election will be called in March. So from now until March, Germany is basically in limbo right now. The economy is not doing well. And the reason why the government collapsed is because they already knew what Trump can do. Okay, Trump may actually abandon Ukraine, and it means that Trump may actually pull out of supporting Ukraine. And will the EU and NATO, without the United States, able to continue supporting Ukraine? So I think at the end of the day, they realize that they have to take things into their own hand. They would have to start to stand on their own 2 feet. They need a higher budget. But the current finance minister decided that it's time to also tighten the belt. So basically now their economic outlook has become very, very mixed. And I think the chancellor realized that with Trump now going back to the White House on January, there is very high likelihood that he will continue to do what he did during his first term, which is to basically withdraw from the EU basically also withdraw from NATO. If that is going to be the case, definitely the European will have a hard time because right now they will be in direct competition. Now remember that Trump's one of his policy is also to impose universal tariff on all imports into the United States. That means allies such as the European Union will find that the product and services when they actually sells into the United States will come under a lot of pressure. Okay, will the EU or their trading or US trading partner will be able to retaliate? It remains to be seen. I think some has already stated that they will retaliate. Canada is definitely very close economically tied to the United States. Justin Trudeau, which is the Prime Minister of Canada, has come out and said that at the end of the day, imposing universal tariff on all imports into the United States will also hurt American workers. I think what he's trying to say here is that he may retaliate against a tick-for-tack tariff. Okay, so that is going to be something that will lead to further fragmentation of the globalization. I think the fact that the world has decoupled has already happened, and it will only get worse during the next 4 years during Trump's administration, because his policy is always America first. Anything that will beat the competition, he will definitely be thinking about United States first. So that is going to be something that we want to watch over the next 4 years. If the US become more protective, meaning to say that all the economic policy imposed by the administration may actually hurt all other economies, especially the emerging economies. Okay, because China, over the last few years, when the trade war was launched in 2018, have decided that they want to skirt around the economic sanction and tariff by shifting their production offshore, especially to emerging countries such as Vietnam, such as Indonesia, such as Latin America. So all this will come to naught if the tariff going to be imposed by Donald Trump in 2025 is going to be universal. Okay, so it doesn't really matter where the import comes in. Okay, so long as there are imports into the United States, it will be slapped with at least 10% increase in tariff. If they can trace those imports all the way to China, the tariff will be 60%. Okay, so we can see that it will be a major setback for China, and especially emerging economies. Okay, because emerging economies, we can see through the currency play, the dollar has rebounded back to a 4 months high. And that is also showing up in the collapse of all other currencies, especially emerging currencies. Okay, so this is something that we want to watch, because if this is the case, next year onwards, it's going to be very tough for all other economies, especially those from the emerging economies. Okay, including countries like Malaysia, for example. You can see that their export into the US will be under a lot of pressure. Now, the other thing we want to be watching this week is, of course, the Australia trade balance. We can see the trade balance has gone from bad to worse. Now this is a true reflection of how far the Australia economy has slid. Okay, before 2018, before the start of the trade war between the US and China, we can see Australia export a lot, depends a lot on China, and since China economy has been hit, okay, first by the collapse in the real estate, and now by rounds after rounds of tightening trade sanction and tariff, we can see that the Chinese demand for raw materials has actually gone down, and that has negatively impacted Australia. We can see Australia do depend quite a fair bit on the Chinese economy. So if China economy don't do well, Australia will not do well. Okay, so this is a reflection. Now, with the trade balance now has shrunk to 4.6 billion Aussie dollars. This is the lowest we have seen for the last 2 years, and it is definitely a reflection of the difficulty the Australian economy is facing right now. Okay, so this will translate to lower Aussie dollars. So this is something that we also can actually trade. Okay. Now, retail sales in the Eurozone actually rebounded remarkably. Okay, so this is going against the grain. We can see Eurozone retail sales is the best we have seen in the last 2 years. So at 2.9%, this is even higher than the previous month, which was revised massively. The original release year-over-year result was 0.8. It has been revised upward to 2.4%. So the latest number to come out was 2.9%, was even better than the upward revision. So we can see this is definitely a something we want to watch. So much so that initially when the news that the German economy, the German government actually collapsed, caused the DAX to actually sell off very aggressively. And now with this retail sales number, DAX has actually rebounded, but I think the DAX damage has been done. Okay, so going forward, any kind of rebound in the DAX or European index, I think it is something that we want to watch. I am very excited about this rebound because I missed out selling the index. I was actually looking out to sell the either the FTSE, the DAX, or even the Euro stock. Okay, especially Euro stock. So this will be a godsend. Okay, because I think the bigger play will be how the US will behave relative to all the other trading nations. Now, the Bank of England also have been cutting rates, and this is now where the rates between the Federal Reserve and the Bank of England are now at par. 4.75 is the same rate that the Federal Reserve has also cut to at the end of Thursday's FOMC meeting. So currently, both central banks are quoting their interest rate at the same level, 4.75, and this is the second cut, very much in line with the Federal Reserve. So this is also showing up in terms of interest rate plays. Okay. So here we have the Federal Reserve having to decide what to do with interest rates, and beside cutting interest rate at the FOMC, at the end of the 2 days FOMC meeting, Jerome Powell actually made a remark which shows that he is very concerned as to whether he can keep his job when Donald Trump comes back into the White House. Now, remember, Jerome Powell has been installed by Trump during his first term, okay? And I think he has gotten into Trump's bad book, okay? Because Trump has hinted to him that he will wish for the interest rate cut to happen after he gets into the White House. But the Federal Reserve Chairman has decided that it's time to cut rates during September 18th, meeting the FOMC meeting. The Federal Reserve actually cut rate by a massive 50 basis point. And then this week itself, he cuts again by another 25 basis point. So definitely he is not in Trump's good book. And he did mention that if he's asked to resign, he will not resign. And nobody can make him resign. Okay, but if the president wants you to resign and you don't resign, the working relationship between the two of them will be difficult. And I think at the end of the day, the Fed chairman will have to yield. Okay, so we will have to see what happens going forward. Definitely, this guy is in a hot seat right now. Okay, especially if Trump's policy end up in rebound in inflation, okay, that means to say that he may have to do another policy flip. Okay, right now he has cut interest rates thinking that the labor market is not as strong. Okay, and it has been the case in the latest non-farm payroll numbers. We are seeing that the non-farm payrolls is actually quite a disaster for last month. Okay, but that could be a one-off. Okay, if we are to believe that the reason behind the very poor non-farm payroll is due to the back-to-back hurricanes in the southern states, as well as the strike in Boeing. Okay, so we will have to see. Okay, so at the end of the day, we knew that the Fed has already cut interest rate by 25 basis point. So that was that was the day after, no, 2 days after the election. Okay, so now we can see that the Canada labor report, and this is definitely not a very pretty picture. We can see that the number of jobs created has only gone up by 14.5 thousand. Okay, 14,500. Okay, when the market was expecting 25,000 jobs, and this is a far cry from the September number of 46,700 jobs. Unemployment rate has remained stable. Market was expecting a 0.1 deterioration in the unemployment rate, but it came in to be the same. So we can see from 6.6% is now currently at 6.5%, but you can see that it is very elevated. Now, if Trump's universal tariff is anything to go by, there is every possibility more jobs will be lost in Canada. Okay, that is almost a given. So the Michigan Consumer Sentiment Index was actually quite good. Okay, it actually improved on the market expectation of 71. It came out to be 73. So I think Americans right now is feeling good about their economy. Things are looking up, and that can be also reflected in the equity markets, being for the fact that all major equity index are trading at fresh all-time high. So this is where we are right now. So if you have any question, then put them into the Q&A so we can address them as we go. Dennis is asking, are we all expecting something bad from Martin Armstrong? Currently, he is holding that conference, which I did not attend. Okay, I'm not sure what will be his latest thinking, but I think going into 2025, that is the risk. Okay, for now, I think the market is celebrating this victory, and they all have a very good feel about where the economy is heading. And obviously, we will have to deal with the national debt issue. Okay, that is something. This is the biggest elephant in the room, and nobody, whether it is Donald Trump or whether it is Kamala Harris, has addressed this issue during their campaign, during the campaigning period. Okay, so I think at the end of the day, you cannot kick the can down the road forever. At some point, you will have to face the music. Okay, because right now we have seen not only China has been reducing their holdings of US Treasury, the Japanese has also been actively selling. Okay, and if the dollar yen continue to go higher, there is every possibility the Bank of Japan may intervene, and when they intervene, they need to get hold of a lot of dollars, and the only way to do it is to sell US Treasury, take the proceeds from the sales of US Treasury, and then sell the dollar in the foreign exchange market. Okay, so if the two major foreign buyer of US Treasury is not buying, and then the demand for higher borrowing requires the Treasury to issue more bonds, I think at the end of the day, they will have to find replacement buyer. There is not many what you call it, influential buyers that can actually pick up the slack. Okay, because when the Chinese and the Japanese collectively sells tens of billions of dollars, definitely there is a big hole. It's going to be very difficult to replace. So based on that, I think the big issue will be what will be happening going forward. Definitely from this fiscal perspective, Trump wants to roll back all unnecessary expenditure, and that relates to maintaining the war in Ukraine. I think if they can roll back their commitment to Ukraine, they can save a lot of money. Okay, and of course, if the war in the Middle East cannot be rolled back, then obviously they will have to contend with more expenditure, which you have to wonder where the money is going to come from. Okay, right. Let's continue. Right, coming up on Monday, we have a holiday. It's the Veterans Day holiday for the United States. So remember, tomorrow there is no US markets. On Tuesday, we have inflation numbers as well as labor numbers. Inflation numbers for Germany, which is the harmonized index of consumer prices year over year. Market expect it to be the same at 2.4%. In the UK, we're going to see the release of their labor report. Claimant count expected to inch up to 30,500 from 27,900. Employment change, no updates, no estimates. And then the unemployment rate is expected to inch up to 4.1 from 4.0 for the month of September. Then in the States, we have the CPI number. This will be a big number to watch. CPI month over month expected to be unchanged at 0.2. The cost CPI numbers month over month is also expected to stay stable at 0.3%. Now, the year over year, this is the one we want to watch. Year over year, expect to inch up from 2.4 to 2.6. Now, this is also something we have to consider. If this number coming worse than 2.6, it's going to have a major move in equity markets. Okay, the fear is that inflation is coming back. Okay, and just when the Fed is is cutting rate, that could actually cause the inflation to flare up again. And if that's the case, coupled with Trump's universal tariff, that will mean going into 2024, into 2025, we can see a large rebound in inflation, leading to the possibility of the Fed having to hike interest rate instead of cutting rates. Okay, so that is something that we want to watch. Now, the core CPI year over year expected to stay stable at 3.3%. And we will want to see the year-over-year headline numbers. Okay, in Australia, again, we'll be looking at labor reports. Employment change expect to shrink from 64,100 jobs to 25,000 jobs. Unemployment rates expected to inch up as well from 4.1 to 4.2%. In Eurozone, we will be getting I think the last reading for the GDP numbers. Quarter on quarter expected to be the same as 0.4. Year over year also expected to be the same as 0.9. Now, the other numbers coming up for the United States will be the core producer price index, and that's expected to also inch up by 0.1% from 2.8 to 2.9%. Okay. And of course, on Friday, we have Japan GDP numbers. This is again with the last reading for the GDP numbers. They expect it to actually be revised downwards. Previously, it was released at 0.7. If it come in anywhere near 0.2, that will be a disaster for the Japanese policy makers. Okay, over in China, we want to see industrial production year over year expected to remain stable at 5.4%. Retail sales expected to be better from 3.2 to 3.8 for the month of October. Then again, GDP numbers for UK expected to revise downwards from 0.5 to 0.2. Again, this will be a disastrous number if it comes anywhere near 0.2. Year over year, no estimates. Previously, it was 0.7, and then this will be wrapped up by the last important number in retail sales for the United States. Month over month, we can see retail sales to inch down from 0.4 to 0.7, and the control group, no estimates here, previously was 0.7. So this is what we have going into the coming week itself. So we'll be looking at inflation number, the CPI numbers, as well as retail sales for the United States. Now, today we will be spending time to talk about both the weekly and the daily time frame. As far as the US equity market is concerned, we can see the Dow is actually very, very strong. So this is a flush. And we have seen how the market has now gone above 44,000 for the first time in the Dow history. So this is definitely very, very strong. There is nothing to suggest that this market is topping out just yet, okay? Because the sentiment has actually changed quite a fair bit. The nearest area of support is probably around 37,230 to 38,400 levels. So if there's going to be any kind of pullback, this area will be the first layer of support, and just have to watch. Right now, simply cannot sell at this moment in point because the market right now sentiment is so strong. Okay, when we look at the open interest and volume traded in the futures contract for all these major equity index, we can see that the volume is very robust, meaning to say there is actually momentum behind this run up in prices. In the daily time frame, you can see that daily time frame, here we are. Okay, in the daily time frame, you can see there's a bit of a divergence going on. Market has traded to a high of 44,162 in the CFD contract, and the nearby support area is somewhere around 40,000 to 41,600. And this is, you can see this flush is so strong. And this is on Wednesday. Result of the US presidential election only managed to come in on the early morning on our time on Wednesday. So that was continued all the way into the US session. And you can see that the market has actually stabilized a little, quite a fair bit from the initial flush here. But here we can see that the market here is showing us while there is a new contract high here, we can see this high is definitely lower than this current high here. Okay, so the current traded high here is showing the market has momentum behind it. However, in terms of the MACD, okay, which is a momentum indicator, we can show that the high here, which is corresponding to this high over here, did not result in a higher MACD value relative to where we are currently trading. So there is a bit of a divergence, and divergence are very common in fifth wave. So if you're familiar with Elliott wave, you'll know that fifth wave may end up as, if you see a divergence like this, for example, it's always setting the condition for a pullback. Okay, so right now there is no sign that it's going to be pulling back just yet. Maybe what we want to do is to monitor the lower time frame, the 1 hour and the 4 hours, to see if we can see any early sign of a possible reversal. Right now there isn't any. Okay, even if there's going to be a reversal, like I said, in a daily time frame, support will probably come in around 40,000 to 41,600. So keep that in mind. In the S&P 500, we're also seeing something very similar. However, the rally in the S&P 500 has been ongoing for some time, and this is just taking it to a different level. Above 6,000, the S&P 500 has never traded at 6,000 before. So this again is a fresh all-time high. In a weekly time frame, this market is super strong, very, very, very strong closing because the market closed almost at the highest point this past week. And the nearest area of support most likely will be about 4,925 to 5,080. So this area here is going to be the first layer of support if there's going to be any kind of pullback. Currently, there's no sign the market is pulling back just yet. We will have to go down to the lower time frame to take a look. Now, this is a daily time frame. Again, what we are seeing in the Dow is also seen in the S&P 500. We can see that the all-time high here, based on the price action, okay, appears to be very, very strong, okay. But in the MACD, we can see that the current high value in the MACD is not as high as the previous peak. So this suggests that there is underlying bit of a divergence. Again, this divergence, if it can be seen across almost all the major equity index, that will be something to be concerned about. But right now, I think it's only evident in only the Dow and the S&P 500. So when we look at the Nasdaq 100 again is a Johnny come lately. The move actually come quite late. Now remember the Dow, the Nasdaq 100, the last high was on July the 10th, okay, and it has not traded to a new high. And this victory by Trump actually was the catalyst to take this market all the way up. You can see Tesla's share has actually gone up tremendously, and Elon Musk has actually increase on his personal wealth. Right now, I think he's worth $300 billion. So we can see that Elon involvement in the Trump campaign has actually paid off handsomely for him in terms of his company's share price as well as his personal wealth. Okay, so Elon may actually feature in Trump's administration, and he may be in charge of a department for what we call a government expenditure. Okay, so basically he'll be looking at where to cut waste, and if Elon is able to do what he does for his company, okay, then that will actually be a great news, because that means to say that because right now nobody knows how many federal agencies there are in the United States, okay, and I think Elon will be taking a big knife to swing and cut unnecessary agencies, and hopefully that will result in some kind of discipline as far as the physical the budget is concerned. Okay, right now there is simply no discipline in spending. Okay, so that will be a big problem going forward. So if Elon can actually help to rein in the out of control expenditure by the federal government, that would be great. Okay, we want to see how he can do that. Okay, and in the daily time frame, we can see daily time frame, the Nasdaq 100 did not have a corresponding divergence. Okay, so here we see that there's no divergence in the Nasdaq 100, and based on the daily time frame, the nearby support is about 19,600 to 19,900 levels, which is not too far away. So if there's going to be a reversal, possibly we want to see it happening in the Nasdaq 100. Now, the FTSE is the market that I want to be very much involved in on the short side, because we can see that the entire UK economy is not doing well, and that should reflect in lower equity prices in the European continent. Okay, so FTSE 100 is definitely something we want to consider. If we just look at the price action in the weekly time frame, a three-wave pullback will result in a revisit of this most recent swing low at 7,912. Okay, and just as we are looking at this level, the area to be concerned will be this low here and this low over here. Okay, and this effectively means that we are looking at possibly a challenge of these levels. 7,750 to 7,910. Okay, so if we do see a pullback into this area here, it does not mean the market is going to collapse. It all depends on how the market approach here. Very possible that we will see near-term support. Okay, again, very much depend on the sentiment in the US equity markets. If the US equity market for some reason experience weaknesses, definitely that will also cause a more severe pullback in the European continent in terms of their equity markets. So this is the daily time frame. Right now, the market has no momentum, but what we see on Wednesday, right after the election result is known, the market actually, the FTSE 100 actually rallied all the way to to 8,300, and then it closes like this. Okay, this is the day the market has a major rally across the board, across all major markets. Okay, and the FTSE couldn't hang on to its gain and end up the day as a doji, but it closes very weak on a Friday. So that sets the sentiment going into this coming week's trading. Okay, possibly we will see continued selling in the FTSE. I think that will be quite universal when we look at how the other European markets are performing. Okay, the DAX is something that I also want to watch. The fact that the German government has collapsed resulted in in a massive move downwards in the DAX. Okay, and this is the third week we see that the DAX has actually been falling. Okay, and just when the market actually was trying to rebound, it actually was hit by news that the German government has finally collapsed. Okay, and this will actually set a negative connotation going forward. I think there's a very good chance even for this, we may see a possible three-way, very similar to what we are seeing in the FTSE 100 for a retest of this most recent low here at 7,009, okay, in the DAX. So again, there is a nearby support here, likely to be around here, this area, okay. Now this is the German DAX. We can see that, oh, sorry, I think the previous chart wasn't a DAX. Okay, this is the DAX. The previous one was possibly the FTSE. I'm so sorry. Okay, so we can see the DAX on the daily time frame, the market has actually gone up in sympathy with Wall Street. However, it was also hit on the same day that the German government has collapsed. So this resulted in this bar here. Okay, there was a rally attempt on the following day, but I think at the end of the day, we want to be looking to trade counter trend in the DAX. I think that will be good opportunity if we can get somehow for the market to go back into the 19,500 levels. This will create a very low risk environment to actually trade counter trend. A target will be for a re-challenge of this low here at the bare minimum. Okay, this low is at 18,185. This is the daily time frame for the DAX. Now, this is the Nikkei 225. The Nikkei has been struggling, okay, because we have seen inflation has not flared up. In fact, prices are coming back down again. So this is creating a bit of a dilemma for the policymakers, especially the Bank of Japan. Okay, right now we are seeing the Nikkei 225 is elevated, but again, there is no follow-through buying. This is this week's trading action here. Market did go back to 40,000, but couldn't hang on and close back down 50%. So this is on the weekly time frame. I think there's a very good chance this low here eventually will be revisited over time, and I am very hopeful that this low here will end up taking up this point of invalidation, which is 30,259. If this level is taken out, this low is taken out, that means the entire market would have gone instinctively to a negative, to a bearish posture. Okay, so look out if there's going to be any pullback in the Nikkei 225. The level to watch will be 30,259. Okay, if this level is taken out one more time, okay, then it means the entire market would have turned bearish on the weekly time frame. In the daily time frame, right now the market is still struggling to take out the 40,273 high, and we have seen Wednesday the market reacted in sympathy with Wall Street, but couldn't hang on, and we can see some profit taking happening on Friday towards the weekend. Nearby support is possibly around 35,000 to 37,000. Okay, so watch this area. There is no real incentive to get into Nikkei 225 right now. I think if I want to be selling, I will be looking towards the European continent. The Hang Seng has not benefited at all. Okay, in fact, the news that Trump has won another term, okay, is actually seen to be negative for China, and that also spill over into the Hong Kong equity markets. And we can see that the Hong Kong equity market did not follow through on the buy side. Market managed to do a marginal high at towards the close of towards the opening on Monday itself. Okay, but it couldn't hang on. It started the week very strongly with a marginal high above this 22,704. Okay, so it did not follow through and it ended up like this. So on the weekly time frame, it does suggest that we may be seeing lower prices in the Hang Seng going forward. This market has already finished its minimum three wave. You can see from this low here, this is a classical three wave move, meaning to say there's a possibility this top here, this higher that we saw on Monday could be the top for this entire move here. So on the daily time frame, nothing much really happened. You can see the market has been in consolidation. Now this consolidation could be a drop-based drop. Okay, I think that is quite likely to be the case. The sentiment has actually turned negative because the last stimulus package has not resulted in a massive run-up in equity prices. So that could actually be seen to be a negative. So right now, the fact that Trump's economic policy is to slap even higher tariff on Chinese export into the United States, that could also show up as to be negative for, generally speaking, the Chinese equity markets, and this in return will show up in the Hong Kong Hang Seng Index. Raja Kumar is asking, trust everybody's fine. Okay, he's asking, will the German economy, when will the German economy collapse, and will it impact euro dollar? It has already been doing so for quite some time now. Since the start of the war in Ukraine, and the biggest victim other than Ukraine has been Germany. And if Germany, being the largest economy in the EU, is struggling, eventually it will show up in the European economy. Right now, the German economy has gone from bad to worse, and now it seems that the people running Germany itself are not united, and this will cause somewhat a negative sentiment to develop in Germany. Very likely there will be, like I said earlier on, the January vote of no confidence is very likely to result in the current chancellor not able to secure a vote of confidence, and that will logically leads to a March general election. I don't think he will be able to clobber enough a coalition party to actually run the government. So going forward, it looks a little bit bleak. Okay, and we also know that Volkswagen has actually decided to close their manufacturing plant, which is something they have never done. Now, Volkswagen is actually, if you go back to the days in the World War II, now Volkswagen, it was meant to be a major pillar in the economy. Okay, it's supposed to reflect how the common people in Germany during World War II were able to come together and build a like a national car. Okay, very much like in the image of Proton for Malaysia. So we can see that Volkswagen having to lay off people and shut down operation is definitely something that comes as a major shock, because they are very massive car makers. Okay, and if they close down their factory, they're not closing one, they're closing two factory lines, two production lines, and that will show up in more layoff. This is something which also tells us that the German economy is in very bad shape. So for all intent and purposes, the German economy has already collapsed. Okay, so it has been ongoing since the start of the war in Ukraine. Ever since they have lost access to cheap Russian natural gas. Okay, and what is the relationship between Trump coming to power and Germany economy collapsing? Now, if you remember during Trump's first term, okay, he actually wants to disband NATO. Biden actually revived back NATO, okay, by giving them a target, by giving them an enemy, okay, and the enemy obviously is Russia, okay. So Biden has actually sold the European that they really have to make sure that Russia is defeated, okay. And right now, the biggest driver of that move towards containing Russia has been the United States through NATO and the European Union. So if Trump is anti-war and he want to put an end to that war in Ukraine, that means all support, okay, will fall onto the European Union. European Union are not united, okay. Definitely, uh, the European Commission is definitely trying to appear to be united, but I think at the end of the day, when push come to shove, everyone will be looking out for their own interests. Already, we knew that Italy and France are charging a different path, okay, away from what the European Commission wants to do, okay. And Italy has actually gone back to China to revive back the Belt and Road Initiative. So these are telling us that the Europeans are not united, and if that's the case, the future of the entire European project may be on the line. So this will have huge implication because Trump wants to pull back from all other engagement in terms of supporting so many military bases. In fact, when Trump comes aboard, if uh, come January next year, a lot of nations will have to bear the higher financial burden of carrying all these American bases. Principally, it will be Japan, South Korea. These two countries will have to foot a higher bill to make sure that American forces remain on their territory. Okay, Trump has already said that during his first term, he wants these people. The way Trump sees it is that the United States is offering protection to this country, and there is no reason why the U.S. needs to pay for it. He wants these countries like Japan and South Korea to shoulder the financial burden. Okay, and that will also mean Taiwan will also come into this category. So Germany definitely have a lot of military bases, a lot of US military bases. In terms of deployment of bases, I think Germany has a outsized portion of American troops. Okay, so if Trump's idea is that people who are supporting the US bases on their land will have to carry a higher burden of financing them, then obviously things will look very different from their perspective. Okay. STI, unfortunately, this platform do not have STI, so I can't share with you. STI is currently at a 17-year high, okay? And definitely the momentum we are seeing in the rest of the world is also showing up in Singapore. So maybe we can take a look at that. So if you want to know more about the other markets, maybe we can do another webinar outside of IronFX, and maybe we can do that. Because based on their platform do not support STI. So I can't give you a rundown of that. Now, I don't know who is anonymous here. Say US inflation comes back and further rate cuts are delayed. Will it be negative for Bitcoin in the short term? Yes. Okay, one of the reasons why Bitcoin has been so bought up, okay, has been largely because Trump is seen to be a crypto president, for one. And of course, if we can also see in gold prices, as gold prices is in direct competition with Bitcoin, because Bitcoin has been seen by a lot of people as the digital gold. So if the dollar currently is favored, so we can see gold prices goes down and the relationship is back in play. Okay, and that means that there is that search for an alternative value, we call that store of value, and Bitcoin has somehow played into that scenario. So if there's going to be rate cuts, the dollar is going to come back down, gold is going to bounce back again, and then gold will be in direct competition with Bitcoin. Yes, there will be some kind of negative connotation related to further rate cuts. Okay, but for now, I do not believe the Federal Reserve would dare to cut rates aggressively, knowing that Trump's economic policies are highly inflationary in nature. So I think if they cut, inflation flares back on top of that Trump's tariff threat, yeah, it is going to be too much to handle. Okay, so I think the Federal Reserve may pause the rate cuts that we are seeing. Okay, because going into this month's FOMC meeting, market has already priced in the fact that there will be a 25 basis point cut. Now, question is, will there be another one in December? Because December will be the last FOMC meeting for the year. And there is a very high possibility, I think the Fed will do the right thing to pause, okay, to pause the rate cuts, keeping interest rate where it is currently at 4.75. Raja Kumar is also asking, we have been discussing the euro collapsing for a long time. Will this be the trigger for big collapse in the euro as currency? I would think so, okay? Because European also have the same debt issue as the rest of the, let's say, America or even Japan, okay? So there will be a spillover effect. If the economy is not doing well, and if they are caught up in this war in Ukraine, in which they cannot extract themselves, especially, okay, then it will lead to a double whammy, okay? And at some point in time, it will show up in the currencies. Right now, by looking at the currencies, especially in the currency in the FX market, you can see how this thing is going to play out. This week's FX movement, okay, is very, very clear, suggesting that by monitoring the FX rate, which currency is going down, which currency is going up, you can more or less see the emergence, or rather the re-emergence of Donald Trump's over the next 4 years. I think the market is already playing out in the currency market. So watch the currency market. The currency market has been very difficult to trade so far this year, okay? But I think this may actually change, okay, going forward. Just watch the movements in the currency market for clues as to where the global economy is heading. Suma is asking, what about the UK economy? UK is already in deep trouble, okay? Now we all know the current Prime Minister of the United Kingdom, his Chancellor of the Exchequer, which is by default the Finance Minister, suggests higher taxes. And I think higher taxes will drive business away. Now, when you are a businessman, you have choices, okay? If any country is not providing you the right or conducive environment, it is very easy for businessmen to actually take their business somewhere else. And that will mean lesser job creation, which in turn will mean lesser affordability, higher prices. So all these are net effect, because if the governments do not look at themselves as the problem, because all governments so far, especially in the West, has been spending as if there's no tomorrow. And they always find the easy way out, which is to tax the population, tax businesses. And if only they start to look at their own spending pattern, maybe they should also cut spending. Without a corresponding cut in spending, even as you raise taxes, it's going to make your country less attractive as a place to do business. Okay, so I would see that as a negative. So the UK together with Europe is definitely in a lot of trouble. Okay, going into 2025, we want to look at their national debt, how they handle those national debt. Higher taxation is not going to work. Okay, higher taxation will lead to a downgrade in business environment. Okay, Trump is saying the right thing. Trump is cutting taxes. Okay, so when you see a country lowering the tax rates, okay, it will make themselves very attractive. There is nothing to stop UK businessmen from uprooting themselves from the UK and set up shops in the United States, especially considering the contrasting taxation policy between, let's say, the UK and the US. So this is actually something that which will actually make the UK a less attractive business to do business. Okay. Okay, now we look at the euro dollar, the weekly. You can see, like I said, this week price movement is showing us very clearly where the markets, okay, is going to be negatively impacted. Okay, the euro traded near the week's low. Okay, and the market has been struggling to go above 112.75. The highest it did was 112.14 before it started coming off. And except for last week, this week itself is the 5th consecutive week in which the euro has been trading to the downside. Okay, so nearby support, I think there's a very good chance if this seems to be a three wave, this low here is almost guaranteed to be taken up. Okay, marginally. Okay, and I think if this low here at 104.48 is taken out, immediate support is going to be somewhere between 102 to 104. Okay, so watch out for some kind of support around here. Do not sell below this level because I think this is so far a technical pullback. If it's going to be a three wave, this low, once it's been taken out, may result in a bounce. Okay, so do not try to sell below this area because this area is definitely an area of liquidity. People who go long the euro will logically put their sell stop here. Okay, so it is a very vulnerable area to put stops. Okay. Davey is asking, is the US equity showing an euphoria phase, and is there an expectation of a black swan event? Right now, there isn't. Okay, unfortunately, based on price action, the market right now is very well beat. Momentum is very, very strong. So definitely, it is that feel good sentiment. Okay, everything that Trump say or what Trump may do in the next year. Okay, although he is 70 days away from being the 47th US president, but the market is already in that that has very high expectation. So the market right now is definitely euphoric, if you're asking me. Okay, so whether or not you can follow through buying, I will be very leery chasing this market. Okay, although the market looks very strong right now, I would have no appetite to chase. Okay, but that's been said, there is no reason for you to sell just yet. There is simply no technical sign that shows that the US, other than the divergence in the Dow and the S&P 500, other than that, there is simply no sign that this market is going to come back down. As to a black swan event, the fact that it is going to be a black swan means it's unexpected. So right now, we do not know. However, going forward, if Trump cannot deliver in ending the war in Ukraine, that would be something. Okay, or between now and until January 20th, if the war escalated to the point whereby even after Trump's got back to the White House, he cannot stop the war, it is possible. Okay, 70 days in politics is a long time. Anything can still happen. Like I said earlier on, there is still the possibility that something bad may happen to the man himself. Okay, because they have tried 2 times, they may try it again. Okay, and on top of that, he has other legal cases, not necessarily going to be impacting him because you cannot put a president elect into jail. That is the fact. Okay, so maybe Trump will be able to buy some time. His problem will come after the end of his second term, and that is 4 years down the road. Okay, so who knows what will happen then. Okay, but I always believe that this election, so far, I think the Democrat is in shell shock. Okay, did not expect such a complete defeat to the point where they lost control of the Senate. Okay, and if they eventually also lose control of the House, it is a total defeat for the Democrats. And I think they have Plan B, Plan C already drafted up. Okay, whether or not they would dare to actually execute Plan B, Plan C to stop Donald Trump from getting into the White House on January 2nd, 20th, we do not know. But it's definitely the next 70 days is going to be the most dangerous period for Donald Trump. Okay, so that could be one of the black swan event. For all we know, we do not know at this moment in time. Dennis is asking from GFC, which is a global financial crisis till now, has the stock experienced bear market? Of course, we have. Okay, from 2008, 2009, we saw the big crash. Then the last crash we had, I won't say the last crash, the last major crash we had was the pandemic crash. Okay, but that lasted only what, 3-4 weeks, and then the most recent one is this year, okay, where the Nikkei 225 had a major, what I would say a major, has a severe decline that leads to what we call the yen carry trades unwinding. That was the mini crash this year. Okay, so yes, but the market has all rebounded back to fresh all-time high, except the Nikkei. So we can see that if the Nikkei experience another unwinding of the yen carry trade, which is very likely, then especially if the dollar yen continue to weaken, okay, then that could be the catalyst coming out, not from necessarily within the United States, but come out from outside of the United States. Okay, let's continue. Now, in the daily time frame, you can see that the dollar rally in the immediate aftermath of the Trump victory, okay, resulted in the euro being sold off very aggressively. In fact, the week's low was actually registered on Wednesday after result of the Trump victory become evident. The euro dollar went out to as low as 106.80 and then started to rebound. But again, you can see how it closed. It closed weak for the on Friday itself. So right now the market is at the inflection point. There is some kind of support here on the daily time frame, 105.50 to 106.80. Okay, the market low is 106.82. So you more or less found some kind of immediate support. If the market breaks free of 105.50, the next level to watch out will be this area over here. Okay, to watch out for further weakness. I think we should be seeing further weakness in the other currencies. The dollar strength may actually continue for a little while longer. So this is the sterling. Okay, sterling has also saw consecutively. This is the 6th week in a row in which the sterling has been closing lower. And but the slide in the value of the sterling is not as bad as the euro. So on the relative basis, I think the sterling is relatively stronger than the euro right now, but I think they both exhibit the same kind of phenomena. It has not been able to bounce for the last 6 weeks. Okay, so there's no reason to suggest that it may actually bounce in the coming week itself. So look out for this. And in the daily time frame, you can see prices, as far as we can see, hit an immediate target here. Okay, this is the 128.34. Okay, so the low was also traded on Wednesday in reaction to the surge in the dollar. So the market has not been able to bounce significantly. Nearby support is going to be about 126 to 126.65. Okay, so maybe the money is not in sterling, but I think euro looks like a good candidate, especially if it breaks the nearby this past Wednesday low. Aussie is also in the rope. You can see that the Aussie trade balance has actually shrunk to the lowest in 2 years, and that has a negative impact on the Aussie dollars. And right now, the RBA has not cut interest rates. If the RBA decides it's time to cut interest rate, the Aussie is going to go even lower, because in terms of the interest rate differential, where US and the Bank of England has been cutting rates, the Aussie central bank has not. And also in the face of the Reserve Bank of New Zealand also cutting interest rates. So right now, when you look at the Aussie dollars, in terms of the interest rate differential, definitely this is a market waiting to be sold. Okay, if and when the RBA starts to cut rates or give signal that it's getting ready to cut rates. So this could be a good candidate for lower prices. There's a very good possibility market could go all the way below this swing low here. Okay. This is the daily time frame. You can see how Friday market result in the mix a bit of a sell-off. And this sell-off here is quite severe. Okay. Although this is was followed by a sharp rally on Thursday itself, but the fact that on Friday the market had lost back all its gain is not a good sign. So I think the market is getting ready for lower rates going forward. Dollar yen actually peaks at 155 or just under 155, and right now it is at the inflection point. Okay, this rally has gone up and I think it has peaked. Okay, and it may be looking at lower prices. So if you look at dollar yen, the fact that it is flirting with 155, okay, open up the idea that the Bank of Japan will be definitely watching the exchange rate like a hawk, because at 162 they came in to intervene. Okay, and that was what caused the unwinding of the yen carry trade. Okay, and if they intervene right now, coupled with any kind of hint that they are getting ready to high interest rates, that will bring the yen carry trade back into sharp focus one more time. Right now, they can't hike interest rates because inflation is backpedaling. So I think the Bank of Japan is waiting for inflation to come back up again. And if that's the case, they will be looking to high interest rates. Right now, they don't have the excuse to do so. And after this round, okay, in which the Japanese policymaker has been acting very independently away. I think they are not consulting the United States, and I think it has the Japanese have angered the U.S. Treasury, okay, by intervening in the currency market and selling U.S. Treasury at the same time hiking interest rates. Okay, so I think this policy is not in sync with what the U.S. Treasury wants to see. So whether or not they dare to do it another time, we do not know. Okay, that's also resulted in the previous prime minister saying that he's not going to seek an extension to the premiership. Right now, we have Ishiba being the new prime minister, but he's currently weak because he did not win the election, the snap election that he called handsomely. Okay, so in fact, the LDP has lost its majority in parliament for the second time in their long history. So that will put the Japanese prime minister not in a very strong position to seek an independent economic policy or even fiscal policy here. So we will see what transpires, because I think the fear for Japan is that they cannot afford the yen to continue to fall. Okay, they will have to find some way to address the weakness in the yen, and that is easier said than done. And one way to do it is to high interest rates. But right now, I think that policy may not be available to them immediately. Okay. Anonymous again is asking question, can I kindly share what are the US stocks that we should look for buying opportunity in the medium term under Trump administration? There's one thing I don't do equity markets. So definitely I can't give you ideas as to which stock will do well. Okay. But when you look at the fact that Trump has come back, you notice that among the equity index that came out very, very strong, it's not necessarily the Dow, the S&P 500, or even the Nasdaq. The one in terms of percentage point increase this past week was actually the Russell 2000. So that means small cap has reacted very, very well to the Trump's victory. So maybe you should look into that sector there, okay? Small caps. I cannot be giving you specific here, but you have to look into the Russell 2000, the composition of that index here. Meaning this is a new bull. No, this is an existing bull. Okay, there is no new bull. Okay, the market is already very late in this bull run. Okay, there is a possibility we may see higher prices ahead, but I suspect come 2025 things will look very different when Trump comes into power and he find that what he promised may not be necessarily be able to be delivered. Okay. Suma is asking what the best currency pair for trading the coming session. In terms of risk reward, I think dollar yen looks good. Okay, although the European currency, when we look at the European, I think the Aussie looks quite vulnerable. But when you look at risk reward, I think the dollar yen in terms of the daily time frame looks very, very attractive. If we see another rally back into 155, 154.40 to 157.90, the area is a very low risk contrarian trade. Okay, at the bare minimum to re-challenge the 129 half year. So in terms of risk reward, you can see it is actually quite conducive to do counter trend. Dollar Canadian has been quite flat. You can see that by and large, the dollar has come off, even though the dollar index has stayed at a 4-month high. So the dollar Canadian is not showing us what we are seeing in the dollar index. Today, I didn't show you the dollar index because the dollar index is not offered in this platform here. But you can always go to TradingView, take the dollar index. It has been relatively strong. In fact, it's at a 4-month high. So in terms of the price action here, you can see dollar Canadian is basically in the consolidation. It is still within the consolidation. And the fact that the market has been coming down 4-5 weeks in a row is not looking too good for this currency pair. Now, this is the dollar Canadian. Prices may be attempting to break out, but there is a possibility. Previous attempt to break out of 140 has failed. 1 time, 2 times, 3 times, 4 times. This is the 5th time. Okay, 5th time maybe it could get lucky, but in terms of risk reward, selling where the market closes on Friday at 139.15 looks like maybe it's worth taking a counter trend. Okay, and all we need to do is consider putting stock just above 140 for the possibility of market revisiting this low, this area here
at 131. Okay, risk reward. Now, dollar Swiss is definitely showing us what the dollar index has been showing us. For this is the 5th week in a row, we can see the dollar relative to the Swiss franc has been going higher, very much not in the same as what we saw in the dollar yen, but dollar Swiss has been quite firm over the last 5 weeks or so. Okay, so this is a daily time frame, nothing to see here, but I think by and large the dominant trend remains for selling the dollar. Okay, immediate target will be 88 cents per dollar. Gold is going to be something very interesting. Now remember at the end, I think 2 weeks ago we talked about gold, right? And I did mention the date to look out will be October 31st. And true enough, on the last trading day of October, the market ends like this. Okay, the high was just under $2,800 per ounce. In the spot market, it was about $2,790 and some cents. Okay, and the market closed as a doji, and that set the market into set a tone for the market going into this week trading. And this week has saw quite a fair bit of down move in the gold. And the reason why gold has come off is quite reasonable, because when we look at what Trump has been telling us that he wants to end the war in Ukraine, and the reason why gold has been so elevated is because of all this geopolitics tension. Okay, and people have been buying up the gold purely because the geopolitical scene looks very, very messy, and it looks at one point it's going to be going out of control. Okay, now that Trump has won, and people will be watching how he is going to negotiate a peace between Russia and Ukraine, and if that is going to be so, nobody dares. It takes away the incentive to buy gold, basically. Okay, so gold has come under profit taking. So not sure whether this will result in a very massive decline, but I think there's still some more room for gold to pull back. The nearest area of support is about $2,340 to $2,500 per ounce. This is based on the weekly time frame. Okay, and in the daily time frame, you can see gold prices has come on very sharply on Wednesday, tried to rebound on Thursday, and then come under selling pressure again on Friday. So by and large, I think this move here will result in lower prices in gold. At the bare minimum for the market to revisit this area here, the edge of this area here will be $2,430. Okay, there is still scope, especially if the market attempts to rally. If it attempts to rally, I will be waiting to sell. You can see that I placed some order to sell here. Okay, waiting for the market to rebound, and I think the risk is worth it. Okay, I don't think there's a very good possibility gold may have been kept for now. Now silver also sell off. Unlike gold, which actually shows sign of fatigue, okay, 2 weeks ago, this one actually was 3 weeks ago, okay. The highest traded was $34.85 in the spot market for silver, and for 2 consecutive weeks, you can see silver prices comes off, okay, and you can see there's a lot of support in silver. Going forward into 2025, I suspect, okay, the gold-silver ratio may actually flip in favor of silver, meaning to say that there is possibly more upside potential in silver relative to gold, purely because I suspect silver may have a stronger outing in 2025. So maybe I will be switching my my focus, looking instead of buying gold, I may be looking to buy more silver. Okay, because silver is nowhere near all-time high, so there's a lot of upside potential to it. Now, this is a daily time frame. It does look like the market is pulling back, as so far it's technical pullback. Nearest support is about $26 to $27.70. So let's watch. The market can bounce back into this area like $33.74. It will start to look very attractive as a counter trend trade. This is crude oil. Crude oil has not really moved anywhere. We saw crude oil rally all the way to $77.92. This obviously referring to the WTI, but it has since lost back a lot of ground. Now, Donald Trump is in favor of opening up more areas for drilling. Now, one of his slogan is drill, baby, drill. Okay, meaning to say he will encourage American oil producers to continue to drill for oil. And this year, United States has resulted in, since the start of the war in Ukraine, the US has been exporting a lot of oil, because the oil that they in the States, okay, their refineries are actually built to process Venezuelan oil. Venezuelan oils are heavy oil, meaning to say they don't flow as easily. They are more sticky and they have higher sulfur content. So the refineries, there has been no new refineries being built. Okay, and the existing refineries cannot process those new oil from the shale oil that they managed to do through fracking. Okay, so the new oil that the Americans are drilling, the refineries cannot process. Okay, or rather, the correct way to say that they are not economical to process, and they do not want to build new refineries to process the new shale oil that they are drilling. Okay, and that means that the US oil producer find it more economical to actually export those oil rather than refine them themselves. So that means to say that instead of OPEC Plus being the dominant factor in terms of price control, I think that has already shifted to the United States. Okay, so if the United States continue to export most of the oil that they drill, okay, it's going to flood the oil market. So that is also one of the reasons why, okay, prices of the oil has not been able to bounce. But one of the things that we all know quite logically, because Biden has been drawing down the petroleum strategic reserve, Trump may actually want to encourage more production to fill up that reserve. And if that's the case, the demand, it will put a floor under the price of the WTI crude oil. So going forward, I am still in favor of looking for levels to buy. I actually bought and I sold off since I see that the market cannot sustain for time being. But I am still looking for levels to buy. Okay, and in the weekly time frame, the fact the market is trading within this highlighted blue area suggests that it is a lot easier to consider buying right now. Okay, then in the daily time frame, prices may have a bit more to go. Okay, if the market falls back into $66.70 to $69, I think I'll be looking for levels to buy one more time. Okay, because considering the possibility of Trump wanting to refill the petroleum strategic reserve, and there is no resolution in the war. Okay, because like I said, from now until he gets back into the White House, we are looking at 70 days from now. Okay, so anything can happen in 70 days. If there is escalation in the war, either in the Middle East or in Ukraine itself, oil prices will again be incentivized to trade higher. Okay, so I'm looking at this mix here and saying that it is a lot more comfortable to be looking to buy rather than to sell crude oil. Anonymous wants me to look at dollar ringgit. I can't do it for the platform here. IronFX do not offer dollar ringgit as a instrument. So for those who wants to look at other products other than what IronFX platform is offering, that means to say that we possibly may have to do another session outside of this platform. Okay, if there's enough people want to do it, maybe we can consider doing one. Okay, but this week itself, I think I would not be able to do so because I have a lot of things in my hand. I have one webinar which I must do on the 12th. That's for Philip. And I have to do another one in Penang. I will talk about it later on. This will be a physical event. I hope you guys can actually show up. Now, this is BTC. 1 hour ago, I would say 1 hour ago, 2 hours ago, I checked BTC was flirting with $80,000. Okay, so this has been a long time coming. Okay, Trump's victory has actually caused the entire cryptocurrency market to actually come alive. Okay, not only is Bitcoin going higher, everything is going higher. Okay, whether it's XRP, whether it's Dogecoin, or whether it is Ethereum, they're all been benefiting from this latest development. Okay, so currently, as we are speaking, for all I know, maybe by now it has already taken up 80,000. But this is a very dangerous area because this bracket of prices 78,300 to 86,600. This area here is, in my opinion, vulnerable to see profit taking. Okay, so if you have not already bought, ideally you do not want to do so now. Okay, so look for some kind of pullback within this bracket of prices. Okay, this is a very, very volatile asset, and just be aware that this is something that you want to consider. All right, I was talking earlier on about the upcoming event. This coming I think it is Sunday and Monday. Now Sunday I will be doing a physical event in Penang. Okay, you need to register. For some reason, they found a location that can only take in 18 attendees. So the spots are quite limited on a first come first serve basis. So if you can come to Penang, join us, and we'll be talking about the more practical aspect of the market itself. I'll be sharing with you my macro and then followed by a strategy session in which I'll be sharing with you how I look at the markets and how I decide where to buy and where to sell. Okay, what will be the trigger to actually want me to actually put in a trade. And this will be followed with a live trading session on Monday evening, which is November 18th. That will be in the evening. Hopefully we are able to do so. And I will take you from concept to application. So what I intend to do is the strategy session that I will share in the later half of the Sunday session. I will take you into application, how I use that to actually apply in a live trading environment. So this will be quite something. Okay, so if you are interested to pick my brains and you happen to be in Penang, and for those who have intention to actually travel to Penang, I will be very happy to see you. And for those who actually show up, I will be giving you a copy of my signed book. Okay, hopefully it means something to you. So this is something that I'll be busy with this coming weekend. So as much as possible, if you are interested, do register at this link over here. And if you cannot see this link or you want to take a screenshot of this so that you can actually get this registration link. Okay, this is what I hope to do in the coming week. Then I'll be going back to Singapore for a couple of days. I have another event in Singapore. So once that is done, I come back here again into KL. All right, guys, this is all that I have for you. Okay, hopefully there's something else I can show you. Now, for those who wants to talk about other instruments, for example, reach out to me individually. So if the demand is strong, okay, then obviously I will find some way and somehow I will do one session for you guys to talk about other markets. All right, thank you so very much for your time, and I hope to see you guys next weekend in Penang. Bye-bye for now. Take care.